Good morning, everyone. This is Doug Campbell with Right Way Options and your morning market preparation video for July 20th, 2017. Well, my goodness, those bulls came out in force yesterday and they were running hard. A full on stampede higher. The diamonds, remember I said, a hammer type pattern here needs to have follow through. Well, we sure did follow through. And just eked out a new closing high here on the diamonds. Just pushing, pushing, pushing. The one that was truly surprising is the strength that showed up in this SPY. Not only a gap higher, but a gap and run and buying going on into the close of the day. Just unbelievable bullishness into the market. Now, one thing I want to caution everyone on is there's kind of a fine line between bullishness and irrational exuberance. Okay. Now, clearly the earnings have really shaken the market up, and earnings reports have been coming in, at least so far, pretty good, and that's encouraged a lot of folks to kind of pile into this market. Now, that can continue. I don't want anybody to think that has to necessarily stop. It doesn't have to stop. The bulls can just keep pushing and keep pushing. Exuberance can last a lot longer than anyone would expect. However, we also, as a thoughtful, prepared, disciplined trader, we must consider the possibility that at any point in time, this could reverse and reverse quickly. Okay, so be very, very careful. Tops get created this way when that irrational move where anybody that had money left in their wallet piles into the market, and then all of a sudden it's over. It's like a heart attack. It just ends. Now, I'm not suggesting that is happening here. I'm just suggesting the possibility exists. So you have to be very, very careful. And the way you do that is you do that with a plan. If you don't have a trading plan, if you're not trading with a plan on every single trade, you're inviting in emotion, you're inviting in all kinds of speculation and bias. The only way you can avoid that is to have a dedicated, well thought out plan, and that plan prevents you from chasing into trades. It prevents you from emotional trading. It prevents you from just really doing stupid things that creates big losses in your account. Now, I can tell you, in a run like this, what I focus on more than anything is protecting my profits and taking those gains. Okay, so I started that last night or yesterday afternoon, right before the market close. I sold GLW, taking a 58% gain. No, I'm sorry, it was 58%. Right at the end of the day, I was able to take 61% gain out of that trade with an option position, obviously. But this is getting overextended for an old stodgy company like this, getting overextended, and I wanted to start taking some profits this week. And there are great profits to be had. So, currently we're looking at Right Way Options members are looking at a 96% gain now on our Microsoft position. Phenomenal results. Okay, 1 day trades, 15, 20, 30% type gains in a single day. So those are the kind of things that you want to focus on. You don't want to chase into a stock like this that's bound to pull back. You want to wait for good quality entries and enter those trades at low risk points. So having that plan prevents you from doing this, from chasing. Okay, so make sure, if you don't have a plan, I highly recommend you stop trading until you do. This is not a place to be messing around. The market is a dangerous place, and there's a lot of sharks in the water. And if you don't have a plan to protect yourself, mostly from you, those sharks will have their way with you. So be very, very careful, okay? Now, let's get back to the market. IWM that has been struggling and fighting and banging its head against this resistance point, tossed all caution to the wind yesterday, and the bulls powered right on through, brand new record high in the IWM. And so here we have, the diamonds eked out a new closing high. The SPY, huge new closing high. IWM breaking to new record highs. And then what was the weakest index in the market, the Qs, after a 9-day straight run higher, slicing through every level of resistance as if it was not there, a new record close on the Qs. Now, to me, that just smacks of exuberance to an extreme, and I have to be cautious and careful when I see that. Now, I'm going to be focusing today largely on protecting gains and protecting profits. Any new trades will be trades that will be planned with very low risk entry points, just in case if the market does roll over. Now, there's another direction here besides up and down that the market can go, right? It can go sideways. And a sideways move would be very good and prove tremendous strength in the market. No sellers want to come in. We just want to rest for a while. That would be huge, and then a buy signal out of there would be unbelievable. However, a reversal would not be out of the question, and so we have to prepare for that. And if we're buying up a bunch of trades right now, trying to get long this market, we're a little bit late, okay? If you're just now coming to it, you're late. And if you don't choose your trades very carefully with low-risk entry points, you're bound to get caught in a downturn in the market and cost you considerable money. So make sure you are picking those low-risk entry trades. Trades, for example, that are just now, breaking out, such as maybe X breaking out of this little tiny consolidation, broke its downtrend, rallying up. That has a low-risk point of entry. Your stop loss is fairly close. Now, percentage-wise, it's kind of a high-risk entry, but low risk in the overall price action of the chart. Things like that. Make sure that you're picking good quality trades to be in that trade. Be in those positions. Don't be chasing something that's already well into its run. Okay, everyone. Let's take a real quick look at the VIX, because I do have a concern here, and I've been mentioning this here lately, that we have no fear in the market, and that usually raises the term complacency. And when the market becomes over complacent, we get these really fast whips, really fast moves or reversal points. I'm not suggesting that's going to happen. I'm just saying the possibility exists, and we have to be aware of that and make sure that you have a plan to protect yourself in every position, Don't get lost in the wild bullishness right now and think that we can never turn around, because we will. We definitely will. So, hey everyone, if this is the first time you've dropped by and seen this information, I put this information out every day. I don't charge a thing for it. I don't even sell anything. What I'm trying to do is help others trade more professionally. And if you would like to receive this information every day or be notified when I post it, because I do post it every day, it's part of my daily prep, and I just make it available to the public. So if this is something you would be interested in, make sure and click that subscribe button on YouTube and that follow button on Facebook, and any likes and comments I would really appreciate as well. Make sure that you're staying focused to those things. Now, today on the earnings calendar, we have over 120 companies reporting today, and we've got a couple things. We've got jobless claims and the Philly Fed. on the economic calendar today at 8:30. But the most important things are going to be, this price action and how we respond to any of the earnings reports as they really begin to ramp up here now for our third quarter. So be careful, be cautious, trade smart, trade wise, trade with a plan. Everyone, have an awesome day. I wish you great profits, and I'll talk to you all soon. Take care now.